right, everyone. Good afternoon. Welcome to today's webinar. My name is Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. Hope everybody's doing well. Just want to do a quick sound check. Those of you joining us via either YouTube or GoToMeeting, just use the chat box. Just let me know that you guys can hear me okay, so I know I'm not speaking to myself. There we go. Wes says, yeah, okay. Mario says, okay. Adrian, Glenn, Kurt, fantastic. All right, guys. Well, welcome to today's webinar called Mastering Moving Averages. And in particular, I'm going to show you guys a really excellent trading strategy, short-term swing trading technique using 3 exponential moving averages called the EMA squeeze. It's a very, very simple system to understand. You may have seen it before if you're a VectorVest subscriber. I did a special presentation back in November on this trading system, and it just continues to work. You know, it's a really good system. So when we find something that works, we always want to just revisit it from time to time. If you've never heard it before, I think you're going to be in for a nice treat here. This is a really, really nice system. You know, Stan and I, who, as you can see there, he's our consultant for VectorVest Canada. Stan will be in the background, by the way, answering any questions that you guys have. So as I go through the content, and I have a lot to cover here today, if you have a question, just shoot it in the chat box. Stan will be here to answer any questions that you have, and I'll try to stick around at the end and answer some of the more common questions. But Stan and I taught this course. We'll talk about the course in a little bit, called Mastering Moving Averages, back in November, and it was just so well received. We got a lot of great emails and feedback from graduates who just love the course, love this trading system. So, you know, so we decided to offer it again. Now, if you're joining us via GoToMeeting, if you have any questions, just shoot your question in that chat box. If you can't see this screen here, this window, I'm sorry, with the ability to ask a question, type in a question, just click on this little orange arrow here, and that will kind of expand that window there, and you'll be able to type questions in. If you happen to lose sound or audio, it does happen, sound or video. Might be due to your internet connection, whatever the case may be. Just log out, close it, and close back in. That usually works. Okay? So what we're going to cover today, first off, why are moving averages so important? They provide a simple means of smoothing price action, which can tend to be a little noisy, which makes the trend and the momentum more discernible. I love using the MACD. I love using stochastics. Stochastics is probably my favorite technical analysis indicator. Moving averages also form the basis for those indicators. So you may not know much about moving averages, but maybe you use the MACD. I mean, the MACD, it stands for moving average convergence divergence. So you're a little bit familiar with MACD, moving averages. Maybe you use some of the indicators that that use moving averages. But they're very straightforward, very simple, reliable tool to help predict the stock's price direction. And here's why. Here are some key concepts. We'll talk about the launch date for the course a little later. We're going to be together for about an hour. I'm going to spend the last 10 minutes or so just talking about the course. But moving averages, again, remove the noise and define the trend to help us predict if the stock will continue to move up or down. And what we're going to cover in today's webinar, 5 key ways to use moving averages. And then I'm going to teach you guys a really simple, effective, short-term swing trading technique called the EMA squeeze swing trading strategy. It's a complete system to pinpoint high probability buys and sells. You know, I do a lot of these webinars, and you know, from time to time I always ask, when it comes to swing trading, you know, what's the hardest part? And the 2 most common answers I get are, when should I take the trade, and when should I exit the trade? You know, another common answer is, what stocks do I trade? And that's you know, that's kind of a common answer as well. But the 2 most wide responses are, when should I take the trade? When should I exit? And what we try to teach you, no matter what I try to teach you here, what Stan tries to teach you, any of our instructors, when we teach these kind of techniques, we want to make sure that the technique has what I call baked in buy and sell signals. So there is no gray area. There's no wondering when you're in a trade, oh, well, what do I do now, right? That's the worst question you can ask yourself as a trader. What do I do now? And I still get that question. I'm in this trade, I'm down big, what do I do? And while I can't tell you necessarily what to do, I'm trying to teach you different techniques that in the future will kind of answer that question, in and of itself. Because this system, very, very systematic, you know exactly when to get in, exactly when to get out. Traders with a short-term perspective, like swing traders. Now, swing trade is anywhere you hold on to a stock for anywhere from a couple of days, maybe a few weeks, maybe longer, just depending on performance and if your sell signal hasn't been generated. Let me just right click here. I want to make sure you guys see my pointer at all times. Swing traders tend to prefer exponential moving averages, EMAs, because they move closer to price, so there's less lag. Moving averages are lagging indicators. Okay, they're not leading indicators. A moving average crossover or an indicator crossover that uses moving averages, it requires a meaningful change in direction. It's not a reversal signal necessarily. Okay, there's plenty of other indicators out there that will help you identify reversals. Moving averages really do a good job of identifying meaningful changes in trend. So what we're looking at here is BAM.A. It's a Canadian stock. The green line is a 13-day EMA, and the red line is a 13-day simple moving average. Simple moving average just simply is determined by dividing the closing prices for each day in the look back period. It's a simple moving average. No other price holds any more weight than any other price in the look back, and here we're looking at a 13-day look back. With an EMA, more weight is given to the more recent prices. That's why swing traders and shorter term traders prefer it, because it's more reactionary. It's more reactive to price. And as you can see, it does hug price a little bit more closely. It does react, right? Here was the turning point of price, and you can see when the 13-day EMA began to curl under and start rising. Simple moving average didn't do that until here. Same look back period, one is a little bit more reactive to price movement. Okay? 5 key ways to use moving averages. Number 1, define and invest with the trend, whether it be up or down. Determine how strong the trend is. And here what we're really looking for is the slope of the moving averages, or single moving averages if you're just using one moving average. But the slope of the moving average helps us determine the strength of the trend. Okay? Identify buy and sell signals. Know when is the safest time to buy and when to consider selling. Either with single moving averages and you're just using price crossing above or below that moving average, that's giving you a buy and sell signal. Or when you use multiple moving averages, crossovers, short-term moving average crossing above a long-term moving average, if you're using 2 moving averages, that gives you a buy signal. Short-term moving average crossing below the longer-term moving average, that gives you a sell signal. When you're using multiple moving averages, like I'm about to show you, 3 different types of moving averages, it also gives us signals to tell us when the safest time to buy and when to consider selling as well. So they really do a great job, no matter how many moving averages you use, to determine buy and sell signals. Excuse me. Determine broad market conditions. Is there more buying pressure or selling pressure? Is the market healthy and in an uptrend, or is it a downtrend? How strong is the trend? They serve as nice support or resistance as well. All right. So for example, if you're looking at a 20-day EMA, 20-day EMA is a very popular exponential moving averages that swing traders use. You have price, excuse me, above that 20-day moving average, but from time to time it pulls back. It'll tend to kiss that 20-day moving average, just barely touch it and retrace from it. If price does that often, a couple of times, 2-3 times, that 20-day moving average is serving as really nice support. If price is below the 20-day moving average and rallying back towards it, but failing to cross above it and then retracing, it's serving as nice resistance, and you can You can develop trading systems or just simply use that retracement off of that moving average as buy and sell signals as well. Okay. Oh, I'm sorry. Is price extended? Okay. Determine if price is overextended and far away from its mean average. So these are moving averages, right? The further anything gets away from an average, the more likely it is to revert back to it. So if price is pulling really far away from, a 20-day EMA or a 50-day moving average, doesn't have to be an EMA, it can be a 50-day simple moving average, the more likely it is to come back and revert towards it. So here we're looking at a predominant trend. Define and invest with the trend. You have an institutional long-term trend. That's a 200-day simple moving average. The long-term trend is a 100-day simple moving average. The intermediate trend in pink here, looks like pink or purple, is a 50-day moving average. And then you have shorter-term moving averages. I believe this is a 13 and a 20 or an 8 and a 13. I'm not quite sure, but shorter-term moving averages. Okay? Price can be in a short-term downtrend, but in an underlying uptrend. And those are the things, guys, that you really want to be able to recognize. Both the short-term trend and all trends, really, but really the short-term trend and the underlying trend. Okay? And I know a couple of really powerful short-term trading techniques that use both trends, because price is below a shorter term moving average but above a longer term moving average. That short term correction is more likely to be just that, a short term correction. Why do I say that? Because you're still in an intermediate or a longer term trend, right? And here's what a predominant downtrend looks like. Shorter term moving averages below the longer term moving averages. Okay, so 50 below the 100, 50 below the 200. Okay, now you're in a very predominant downward trend. Okay, so just some basic kind of concepts there on moving averages. Short-term moving average, intermediate, longer-term moving averages. It's important, no matter how you're trading, to recognize all of them. Okay, you've heard the term before, buying the dips, right? Well, a dip in a underlying downtrend is not a dip that you want to buy, right? So let me go back. So here's your underlying downtrend. This is a dip. That's a dip. That's a dip, but you're in an underlying downtrend. Look, I know eventually you'll catch the bottom, but that's not what we want to do. We don't want to eventually catch a bottom. We want to be consistent with our trading. These dips in underlying downtrends are very short-lived. The rallies are very short-lived. So in an underlying uptrend, let me go back, okay, we want to buy the dips because of the fact that the majority of the move that we're seeing is an upward move, right? Not the case here. Majority of the moves are down moves. So we are launching a new course. Begins on April 3rd. Now we'll talk more about the dates later, but you will have access to all the core material in the VectorVest University upon registration. But this is an email that Bob K sent to Stan after the last course that Stan and I taught back in November. He said, "Stan, you are a very good teacher. I like your style, but most of all, I appreciate the simplicity of your explanations of the strategies. I am more impressed every day by your instruction and content of this series of strategies and systems. Each is very good. In certain circumstances, I can see myself using most of them, depending on the portfolio I am working with." What he means by that is, Bob sounds like a trader or an investor who has multiple portfolios, longer term portfolios, right? Retirement portfolios. Bob probably has money set aside that is trading a little bit more actively, shorter term swing trading. He plans on incorporating many different types of moving averages to help manage those different types of portfolios. So for the retirement portfolio, he's likely going to focus on 200-day moving averages, 100-day moving averages, and maybe a 50-day moving average. For a swing trading portfolio, he's going to go a little shorter term. 3 EMA, 8 EMA, 13 EMA, maybe a 20 EMA. So these techniques that we teach you in this course can be applied to, many different types of trading techniques or portfolios that you're managing. What I'm going to share with you now are moving average combinations that are ideal for shorter term swing trading. Not too fast, not too slow, kind of right in that middle area. We call it the EMA squeeze. Gives you a nice combination to predict a short-term price trend with really high probability. So here's what we look for. After a pullback or quiet period where the three moving averages have squeezed together, 5-day EMA, 8-day EMA, 13-day EMA, you can almost imagine them right on top of each other, touching each other, squeezing tighter and tighter. So we look for that first. They start to pull apart though. When price consolidates, when it pulls back and capitulates, that's when you get the squeeze. They'll start to pull apart and fan out once the trend starts to move higher, once the stock price starts to move higher. So using the slope of those three moving averages after a squeeze, we can predict if a significant trend change is underway and whether it's likely to continue. A strong upward move increases the probability of a successful trade. A nice breakout, nice big unfilled green candles, right? That's what we're looking for here. Once those moving averages start to fan apart, we're looking for a nice breakout, nice strong days, nice good volume days. That's going to increase the probability of a successful trade. So here are our buy rules. Okay, we want the 5-day EMA to be above the 8-day EMA and the 8-day EMA to be above the 13-day EMA. That has to happen. That has to be true. We also need price to be above the 50-day simple moving average. So here we're using a simple moving average, not an EMA. When you go higher than a 40-day moving average, I think it's okay to use a simple moving average. 50-day, 100-day, 200-day, no need to use EMAs in that case. 50-day moving average, to help us identify the intermediate term trend, simple moving average is fine. Okay. We also need the relative timing indicator. For those of you that are not VectorVest subscribers, RT is a proprietary VectorVest indicator that measures a stock's ability to, that identifies a short-term price trend. It's on a 0 to 2 scale. When it's above 1, that's good. Below 1 is bad. So what we need is the RT indicator to be trending higher over a minimum of a 3-day period. Okay, moving higher for 3 days. We also need the market to be in an uptrend, and with this system, we're using our DEW market timing system. And the sell rule, those are the buy rules. Now, I always like to, when I'm teaching a trading system like this, show you a slide like this with them written down, kind of numbered or in bullet form, because many of you like to or learn better, reading words and reading numbers and seeing instruction written down like this. We're going to look at a lot of charts here in a moment. For those of you that learn better that way. But the sell rule, or the line in the sand, okay, is the 5-day EMA closing below both the 8-day EMA and the 13-day EMA. That is your sell rule. Okay. So here's what it looks like on some mini charts here. We'll look at some bigger charts, but the pink line, pink, purple, whatever you want to call it, that's the 50-day simple moving average. Prices in candlesticks. The 5-day EMA is in green, the 8-day EMA is in red, and the 13-day EMA is in blue. So let's look at this period back here when price was below the 50-day moving average and falling. Okay, you can see a little capitulation that happens and price begins to rise and the moving averages begin to squeeze. You can see that squeeze. I mean, they're not squeezing here, they're fanning, right? They're separating. Um, five is below the 8 is below the 13, you're in a downtrend. Now that reversal occurs and the moving averages begin to squeeze together. Then as price continues to rise, and now you're starting to see some nice unfilled green candles here, right? You can see the fan. The slope is up, the moving averages are trending higher, and the bands begin to pull apart. Remember, what we have to, and that's good, what we want to see that's a nice early warning signal, particularly when price is still below the 50-day moving average. We don't take the trade when price is below the 50-day moving average. We have to make sure that price crosses above the 50-day moving average. It does on that day there, that unfilled green candle there. Price closes above the 50-day moving average. We're still seeing that fanning action of the three moving averages, the 5, the 8, and the 13. And we have relative timing rising. There's your setup, guys. There's your trade. Okay? We enter the following day. We don't enter on the close or near the close of the day where price closes above the 50. We wait for confirmation the following day in the form of price rising higher than the previous day's close. Then it could be the day the stock closes above the 50. If let's say the stock closes above the 50, right? But we don't quite see the moving averages fanning apart yet. We wait another day or so until we really see those three moving averages begin to fan. Now on the day here that the price closed above the 50, that's fine with me. I take that trade the next day because on that day I'm really starting to see that fanning action. Actually, I saw it the day before, but price didn't close above the 50 the day before. Okay, so there's your entry signal. We're going to look at some charts in a moment. But here's your sell rule if you're prudent. Okay, you look for the 5-day EMA to close below both the 8-day EMA and the 13-day EMA. Now that happened over here. But there are warning signals before that happens that if you become real keen on recognizing, you might be able to exit the trade a little earlier. One of those warning signals is price relative timing divergence, meaning price is rising. Let's pretend right here is the hard right edge. Okay, I know we have data after that, but let's just pretend here is the hard right edge. As of that hard right edge, I'm seeing price rising, but I'm seeing the relative timing indicator just a little sloping downward, falling a little bit. That's an early warning signal that this trend is dissipating, it's weakening. Okay. Also another warning signal will be gap in the bands really widening. I mean, really widening, especially the further away you get from that 50-day moving average. That's a warning signal, letting you know that price is overextended. Remember in an earlier slide I talked about how moving averages help us identify if price is, overextended, way too far away from the average. So the expansion of the bands. Now that the expansion of the bands is a positive bullish sign early in the trend, but later on in the trend, okay, it's going to serve as a warning signal of a potential reversal. Okay, another warning signal is if the 5 and the 8-day EMAs are squeezed. So maybe you have the 5 closing or crossing below the 8. You can see that squeeze happening there. That's an early warning signal. The line in the sand, the last line in the sand, and for you prudent investors who say, you know what, that's too much for me to remember or to recognize. I'll just wait simply and sell when the 5-day EMA crosses below both the 8 and the 13-day EMA. And as that's happening, you can see the relative timing indicator continues to hit lower highs. Candlestick reversal patterns, guys, at those turning points there are good as well to help protect gains. You can lock in some profits. You can book some profits maybe. Sell half a position. I always like to do that. If I have an initial profit target, if I'm, let's say I'm trading a bull flag, I know where I expect price to move to after the breakout. I have that what's called measured move, and that's where I'll set my initial profit target. If price reaches that level, I'll take half off and I'll let the rest run. So what you could do, if you see a reversal signal or a divergence, you can take half the position off, book some gains, let the rest run, reduces your exposure a little bit. If the rest does run, if price continues to run, great. If it doesn't, you've already booked gains and your losses from that point are minimal. Okay. So notice how we don't have a ticker on this stock here. It doesn't matter. The ticker symbol doesn't matter. It's the technique, and we don't even have price on this chart either, because you don't really need price so much. You do when you're having to make sure that it's above the 50-day moving average. But here we're looking at price below the 50-day moving average during, this is March, April of 2020, the COVID crash, right? Moving averages are below the 50-day moving average. You get that capitulation, that squeeze of those three moving average, and then price begins to rise. The moving averages begin to trend higher. You see that fanning action of those three moving averages. Price closes above the 50-day moving average. You also have RT trending higher. There's your trade, guys. There's your setup. Okay? That entry resulted in almost a 50% gain because you didn't get the 5-period moving average closing both below the 8 and the 13 until mid-July of 2020. And you can see what price did after that. So good opportunity to take gains off the table, dead money at that point, no discernible trend. Moving averages are just getting bounced around, squeezing, tighter and tighter, no real fanning action anymore. You take your gain off the table, you move on. What you also see here is that divergence. Not, I guess it is a divergence because price really moving sideways. And look at that relative timing indicator, steadily falling. Okay. So here's a Trulieve cannabis company. Good news out of New York. If you guys follow cannabis companies, those of you that are in Canada probably do. I have been now for a few months. My favorite, just personally, is Cresco, one of the big MSOs here in the U.S. Nice long-term holding. New York just legalized recreational use. Now, it won't take it into effect for 18 months, I read, which is a little unfortunate, but good long-term growth in this sector, I believe. Hopefully in the U.S. here, I know it's been legal in Canada for quite some time, but with this new administration, I hope that they'll legalize it federally. A lot of good companies, I think, will do very well, Cresco included, I hope. Got a lot of exposure there. But here with Trulieve, there's your squeeze. Now this is a different kind of a setup, right? In terms of price wasn't below the 50-day moving average and just recently crossed above it. Okay, so that doesn't have to be the case. Price doesn't have to be below the 50-day for an extended period of time and then cross above it for you to take the trade. What we're seeing here is price above the 50-day moving average, but that capitulation results in the squeeze of the three moving averages. Now you start to see price pulling away from the 50-day moving average, already above it. We don't have to wait for it to cross above it because it's already above it. But the separation that's being created, nice strong trend. You can see volume too coming into play. So buy signal was on July 13th of 2020, right about $20, $20.15. Okay. Now I know what you see. Oh man, I enter the trade, and this always happens to me. The stock price falls for 4 days right after I enter. Right, that happens to me. I'm sure it happens to you as well. Now, in the past, what you may have done is sold. I wouldn't say necessarily panic selling, but sold because, same old story, right? You enter a trade, it goes down for 4 straight days. Let me just cut my losses. This isn't working out. That's an emotional reaction to adverse price action, right? Well, with this system, you wouldn't have sold because the 5 never crossed below both the 8 and the 13. It stayed above and allowed you to stay in this move all the way until August 27th of 2020. Okay, that's when the 5-day EMA closed below both the 8 and the 13. That's a nice 33% gain there in just about a month and a couple weeks. Okay, price continues to fall. Okay, continues to fall. Then it crosses below. Again, we're looking at September, August, September, October 2020. Price continues to fall. Crosses below the 50. Okay, crosses below the 50, but then starts to rally. You see, okay, the green line is the 5, the red line, whoops, the red line is the 8, blue line is the 13, right? All three of those moving averages are below the 50. Then you get the squeeze and then the rally. Price closes now above the 50-day moving average, and you start to see the bands pull apart. Look at the relative timing indicator, how it's rising as well. It did dip below 1 there, but then it crossed above 1, stayed above 1, hitting higher highs and higher lows. That pop above the 50-day moving average is also accompanied by really nice volume on those days as well. Nice little kick in the butt there, right? Nice little tailwind, having that volume drive price higher. Okay, we take the trade, and this was, not necessarily the hard right edge, but all the way until January of this year, nice almost 49% gain. Not once, I know it looks like it did here, but not once did the 5 cross below both the 8 and the 13, giving us an opportunity to stay in the trend. Stay in the trend. Sleep Number, this is a U.S. Market company. Another example here where price has already been, it's staying above the 50, it's above the 50, it's not crossing from below the 50 to above the 50, but you're still getting that squeeze. You got price hugging the 50-day moving average, little, really low volatility here. The squeeze of the 3 moving average, and then the moving average begin to separate, start to pull apart. On that day, October 15th, you got volume that was higher than the average. Again, nice conviction there on rising price. Relative timing rising higher, the bands are pulling apart. There's your entry. Okay, not once during this, let's see, October to December, 2 months or so, did the 5-day EMA close below both the 8 and the 13. Now this big red candle here, boy, that would have shook a lot of people out. That's actually a bearish engulfing pattern as well. So I talked earlier about how bearish candlestick reversal signals can serve as an early warning signal and allow you maybe to exit the trade a little sooner before the 5 goes below the 8 and the 13. But what you have to remember, if you're anything about bullish and bearish candlestick formations, you need confirmation the following day. Okay, you need confirmation the following day. We never got confirmation the following day. So even though that is a bearish signal, a bearish reversal pattern, you need confirmation the following day to take action, and we never did. Stock continued to run, little consolidation period here, but the 5 never crossed below both the 8 and the 13. 52% gain there. LPX, another U.S. stock. This is a building wood products company. I'm not sure what it did today, but I think the hard right edge here is just yesterday. Lumber prices have been skyrocketing lately, so this company's been doing rather well. Buy signal was on January 21st of 2021 at about $30.94, resulting in an 81% gain. But here again, price above the 50. We don't have a situation where it crosses from below the 50 to above the 50. Relative timing trending higher. Nice volume day, right about at the average on that day. But the moving averages are separating. We get our signal. Almost got bounced out a little too quickly here. 5 never closed below the 8 and the 13. Might have closed below the 8, never closed below the 13. And we were ready to ride this trend higher and higher for an 81% gain. Okay, we're looking at about a $56 stock as of the hard right edge. All right, there's a lot to unpack here with this chart. This is a Canadian stock, Kinross Gold. traded on both the U.S. and Canadian markets. Actually, it's a gold company, gold stock. So here is that quiet period. I know it doesn't look like a quiet period. You know, there's quite a bit of volatility here. But price did cross below the 50-day moving average, kind of bounced above it. But during this breakout above the 50, did we see the moving averages fanning? No. What about here? This breakout above the 50. Well, not only did we not see the fanning, we don't have the 5 above the 8, the 8 above the 13. Here's where we begin to see that. We see price crossing above the 50, and now the short term is above the middle term. Middle term is above the longer term moving average. 5 is above the 8, 8 is above the 13, and the bands begin to separate. Relative timing now during this time period is hitting higher lows. Okay? So there's our trade. Remember what I said earlier, you know, what we want to do is to jump on the trend as it's emerging, but not too early where we enter prematurely with a false signal or a premature signal. That's why the moving averages are so important, and that's what they're really used for here. When those three moving averages begin to fan apart, that is telling us that the trend is more likely to continue, that the stock price is more likely to continue to rise. This resulted in a 33% gain. Okay? Here is where you got your sell signal, the 5 crossing below both the 8 and the 13. Now what we saw here too is the separation, right? You know, it's good to see the separation earlier on in the trend, okay? But you know, the EMAs are getting wider and wider, okay? The trend is the strongest when that happens, especially early on. But as price pulls further and further away from all three of those EMAs, and especially from the 50-day moving average, eventually you are going to see a reversion. Now we kind of saw that here, didn't we? But that reversion, that pullback, didn't result in us selling the position because the 5 never closed below the 8 and the 13 in this case. You may say, man, the price is really overextended here. And it was really overextended. You know, it's not 100% that every time price is overextended, it's going to come all the way back to touch the 50-day moving average. Eventually it will, though. And what we're trying to do is minimize the amount of profits that we give back during that time period when it does come all the way back to the 50. And using that crossover, the 5 crossing below the 8 and the 13, does that. It minimizes the amount of profits we give back. Look, we're going to give back gains with this system, right? Because remember, we're trend trading. All right? We're trend trading. We're looking for a meaningful change in trend to enter. We're looking for a meaningful change in trend to exit. We're going to leave some money on the table by entering in, you know, off of the actual swing low, you know, and we're going to give back some when we exit off of the actual high. That's what trend trading is about. Okay? Here's this quiet period that happens again, a little capitulation right above the 50-day moving average. Okay? So we don't cross below it. We stay above it, right? We got out here. We remain out. Capitulation, squeeze, quiet period, squeezing of the moving averages, and then price begins to rise and pull away from the 50 again. The fanning occurs. You can see volumes start to pick up there as well. Okay? 27% gain in this case because here's where we exited. Okay, here's where we exited. Look at how far price pulled away from the 5, the 8, and the 13, and the 50. Eventually we got our signal. Oops, sorry. I keep pressing my mouse. Eventually we got our signal to sell. Okay. Here's WEL. Got a couple of different setups here. Couple of different setups. So none of these setups, though, let's talk about the first entry, our initial setup. Here was the squeeze. There was the quiet period above the 50. We entered the trade, right? The moving averages, those three began to separate. Our T was trending higher. Look at that volume spiking. All right, nice entry there. We didn't get, I have to look closely. Nope, we didn't get a sell signal here. 5 didn't cross below the 8 and the 13. But did we get the squeeze? We got the squeeze. Then we got the fanning again. What can you do during or right after this squeeze or quiet period? Well, you can add to your position, can't you? Right? You can add to your position. What can you do here? If you wanted to. I'm not saying, everybody go out and do that and just keep buying more and more, but, there's nothing wrong with buying more and more of a stock that's continuing to rise. But these are setups as well. Let's say you didn't take that trade back here in July of 2020. You had an opportunity to take it here in August of 2020. Let's say you didn't take it there. You had another opportunity because of the squeeze of the moving averages and then the fanning apart. So setups, they could either be initial setups, initial trade executions, or opportunities to add to positions as the trend continues. Okay? All right. So the setup, the hardest and most time-consuming part of swing trading is to find the right stocks, right? With the correct setup early in the trend change. There's 3 ways to do this. The first 2 methods are what we call the 1-by-1 method, which means you can look at the stock viewer, you can look at a watch list, and you'd go through the charts one by one. You would apply the relative timing indicator and volume to the bottom. You would apply the 50-day moving average and the 5, 8, and the 13-day EMAs to the chart. And you go through chart after chart and say, all right, as of the current day, do I have a setup? Right? And we know what a setup looks like now. Price, either just crossing above the 50 or already above the 50, the quiet period, the squeezing of the 3 moving averages, and then price beginning to pull away from that 50-day moving average with the 3 moving averages, the 5, 8, and the 13, beginning to fan apart. Relative timing moving higher, that is your setup. Okay? 1-by-1 method, look, it's doable, but just very time consuming. My preferred method, I know this is Stan's preferred method as well, is to use our Unisearch tool. It's a search engine. It helps pinpoint potential candidates that find the stocks that meet the setup. We're going to focus on this one. You're going to get these slides, guys, by the way, so don't worry about writing any of this down. You're going to get these slides. Stan's going to send them to you. We're going to give you, everybody, Stan's email address. I think he's going to send them out anyway. But this is what this is what the EMA squeeze scan looks like, right? 5-day EMAs crossed above the 8 in the past 5 days. We want both moving averages moving up, right? 8-day EMAs crossed above the 13 in the past 5 days. We want both moving averages moving up. Relative timing greater than it was 3 days ago. Simple price and volume parameters that you can increase. You can go, stock price greater than 5, greater than 10 if you want. Bump up the average volume if you want as well. And then the last parameters here is looking for the MA1, which is price, to be above the 50-day moving average. Whether it just crossed above or not, or if it resides above, it doesn't matter. Price needs to be above that 50-day moving average. Now this scan requires at least the Pro Trader add-on tool. And by the way, you're going to get this tool. We're going to give you this tool as part of the course, which I'm about to get to here in a moment. All right, key concepts. Let's use history to give you confidence. If you're looking at a chart, a high CI stock, for example. Well, high CI stock is a CI is an indicator within VectorVest that measures a stock's ability to resist pullbacks. Nice, smooth uptrends. Follow my mouse. This is what a high CI stock looks like. Okay? Continuing to move higher, very resilient to price pullbacks. They exhibit price growth, persistence over time. Well, if you're looking at a graph over the last year, for example, and you're observing EMA squeeze setup after setup, and those setups result in winning trades, well, that's going to give you confidence that, hey, the next setup on this stock, is likely to result in a winning trade. Okay? And it can be applied to both the Canadian and the US markets. By the way, it could be applied to any market that you trade. In this course, we're going to be focusing on the US and Canadian markets. Okay? But the system that I just taught you here, the EMA squeeze, and really any system that we teach you in the Mastering Moving Average course can be applied to any market that you trade. So as a recap, our buy and sell rules are as follows. The DEW has to be in an up signal situation. Okay? Price has to be above the 50-day moving average. The 5-day EMA has to be above the 8-day EMA. 8-day EMA has to be above the 13-day EMA. And the RT has to be trending higher. And what we're really looking at is higher over the last 3 days. Sell rules, real simple. 5-day EMA closes below it's been a long day. Below both the 8-day and the 13-day EMAs. There are earlier warning signals. We'll teach you those signals. We'll review those signals in the course. Okay? But this is kind of your last line in the sand and a very easy approach to take. So what we covered today were just 5 key ways to use moving averages and a really simple and effective, complete system to pinpoint high probability buys and sells. And that's the EMA squeeze swing trading system. Okay? So let's talk about the course. It says new course, but this is actually the second time we've taught this course. Stan and I taught this course back in November of last year. It was so well received. We decided to launch it again. You get full access to all the trading modules at the time of purchase. So what I want Stan to do, if he doesn't mind, is type in the address that you see at the bottom there, Stan, www.vectorvest.com/MA. Now the regular price is $5.95. But for you folks today, we want to give you guys an opportunity to register and join us for $295. That's US dollars. Okay. Early bird rate is $395, but we had to knock an extra $100 off here for you folks that are on the webinar here today. www.vectorvest.com/MA. Stan, type that in the chat box. You guys should all see it. You can just simply click on it, and that will give you the $295 rate. So here's what we're going to teach you. First off, the VectorVest system. We kind of lay the foundation, the groundwork for the entire course. Common principles, basic principles of the VectorVest system, different tools and market timing systems that we'll use. Understanding the different types of moving averages. Techniques using single moving averages. Golden crossovers, short-term moving average crossing above the long-term moving average. You can use moving averages like a 50 and a 150. That gives you a signal for a longer term position trade. Look, you're well off of the bottom. You're well off of the low when that crossover happens. But that's the type of portfolio you're managing, right? We'll teach you other crossovers, more shorter term crossovers for swing trading techniques. Moving averages as support and resistance. We're going to talk more about the EMA squeeze swing trading strategy, more multiple moving average trading systems, a system that Dr. Barbara Starr, she's a VectorVest consultant. She's a technical analysis consultant. Her and I actually have worked, we've worked for a long time. I've been with VectorVest now 15 years. She was consulting with us far before that. Her and I wrote a few articles in Stocks and Commodities magazine together on bullish and bearish candlestick formation using stochastics. She has developed this system called Surfing the Reversal Waves, a really good system. We're going to teach you about the Midas Touch system for both swing and long-term investors. This system applies moving averages to our stop price, the VectorVest stop price, and also our relative timing indicator. And then a bonus trading system, okay? Trading high-low moving average bands. And we are also, Stan and I, going to give 6 live mastery class sessions. These are live. The modules are pre-recorded. All the lessons are pre-recorded. Once you go and register, guys, you will have almost immediate access to the course material. And you'll have all the modules. You'll also, with the great part about our new VectorVest University, you'll have them all at once. It's on demand. It's like Netflix, right? I don't know about you, but I throw on a show and I don't stop till it's done. So you get to watch all of these core lessons as many times as you'd like, up until our first mastery support session. I'll get to that date in a moment. But you also have access to the old mastery classes that Stan and I did back in November. Those are archived in the university. They will be replaced with the new ones that we do. And that'll happen in 3 or 4 months from now when we do another Master Moving Average course. Those live sessions that we do will replace yours, and you will have access to those as well. So it's rolling new content. Anytime we deliver new content, you will have access to it. You have access to this course, guys, for an entire year. Okay? So here's what you get. The mastery classes, they begin April 21st. Okay, that's our first live mastery support session. You don't have to wait till April 21st to start watching the lessons, though. You can do that upon registering. Current subscribers, you get access 60 days to the US real-time program or the Canadian real-time program. The default is the US real-time premium program. If you want to change that to the Canadian real-time product, just give our support department a call after you register. You have to go to that website, vectorvest.com/MA. That's how you'll get the $295 rate. You will then, once you register, get emails confirming the registration, and then if you want the real-time program for the Canadian market, just give our support department a call and say, hey, I just registered for the Masters Moving Averages course. I know it defaulted to the US real-time premium program. I want Canada, and they'll switch that. Okay? Non-subscribers will also get free access 60 days to the VectorVest software. Okay, and that includes Pro Trader and the auto timer as well. Pro Trader is crucial, guys, for this course. That gives you the technical scans, the technical searches. Within the Pro Trader tool, you can search for moving average crossovers, which are obviously very important for us here for this course. MACD crossovers, Bollinger Bands, stochastic support and resistance, RSI, channels, envelopes, ATRs, DPO, and I think that's it. But that's a lot of different technical indicators that you can scan for. That is the Pro Trader module. It's not a module that just comes included with, an end of day package, VectorVest end of day. It comes included in the real-time premium package. So that's what we're going to give you here as part of the course. The auto timer adds market timing to fully automate a back test or a portfolio. Okay, and again, you'll get 60 days access to those tools. So the 10 full lessons. So you're probably wondering, okay, well, 10 lessons, but only 6 mastery classes? Yes. What we'll do is, what we've done is we'll bunch lessons together and cover the contents of those bunched lessons in a mastery session. Okay? And once you go into the lessons, okay, you'll see the mastery class in one of those lessons. So let me just say this. If you go into a lesson, okay, if you go into the outline and see a mastery class, I know it doesn't show that here, okay, but just know that that mastery class covered all of the contents above, okay? So maybe a couple of lessons down, you see another mastery class. That mastery class covered the contents of the lessons above, ending with the lesson right below the first mastery class. You guys follow me? Okay. Here are the dates for the live mastery classes. We start April 21st. Okay. Felix says, okay, I'm in. VectorVest is just so addicting. Just finished class with Ron's options. Awesome. I'm sure it was a good class, right, Felix? Well, welcome aboard, Felix. Looking forward to working with you. Okay, awesome. Here are the dates for the mastery classes. They will begin at 2 p.m. Eastern Time. April 21st, I believe, is a Tuesday. Nope, it's a Wednesday. Each of these are Wednesdays. Okay, each class is a Wednesday. Once you register, you'll get an email with instructions on how to access the course in the new university. And everything is right there for you. Okay. Here's another email that Rob O sent to Stan after the course. He said, thank you once again for a great presentation on the multiple moving averages. Your Mastering Moving Average course, as always, is well documented and has a wealth of information. I really like the 20-day moving average channel search. By the way, you will have access to searches. Stan is in the process of recording little videos to show you how to create the searches that we will be using in the course. In the university, in the resources section, there are also screenshots of the parameters for each search. We think it's really important that you learn how to build scans, how to build searches. Okay, so that's why we put them in the university, the screenshots, and Stan's going to record videos just step by step, click by click on how to create them. It's going to help you in the long run, trust me. Because months from now you're going to say, I want to create this type of scan. Maybe you have an idea in mind and you want to create a scan using moving averages or different indicators. Now you'll know how to do that. Where before, if we just gave you the searches, you might not know how to create them. Okay. He also says, Rob says, I think the Mastering Moving Average course should be a fundamental course for new and experienced VectorVest users. It has been very educational. Look forward to using the setup / searches of the program to advance my investing success. Warren G, not the rapper, but former student, former graduate of the Mastering Moving Average course. After taking the MMA course, I am now able to better determine entry and exit points. And he goes on to just explain his win-loss percentages before and after using some of the different moving average techniques that we teach. Okay? If you need any help, if you have any questions, give our support department a call. There is Stan's email address and there is my email address. To register, guys, for the $295 rate, now that $295 rate will go away soon. It will revert back to the early bird rate of $395. So that's a 25% discount, 25% discount if you register here now. www.vectorvest.com/MA. Okay. You can call our support department if you have any questions. You can email Stan or myself if you have any questions as well. We are your go-to kind of point people during the course and after the course. We got a ton of emails, right, Stan, during the course with students asking questions and stuff like that, and we continue to get them, which is fine. That's what we're here for, and we want to make sure that you're not left behind or just left having to digest all of this on your own. Okay. Any questions at all? Okay, so Steve says, I'm in. Welcome aboard, Steve. Fairly new and want to get good at the searches. Well, you will be good at writing searches, Steve, after this course, because, man, there are maybe six to nine different searches that you will have to create. You'll get good at creating them. Now, those are just 6 or 9 searches with very specific indicators and parameters, but at least you'll get into the habit of building them click by click, understanding what each parameter and operator and value is all about. Felix said, watching it tonight, just promised myself to place a winning trade to pay for it. Look, this market maybe is picking up some momentum. Today was a good day. Let's really hope that it continues to run. Enough is enough, right? I know everybody's portfolio is, kind of struggling a little bit, but now's a good time to start learning these techniques for when the market really does pick up momentum again. Kevin says, will I require the ProTrader add-on after the course to optimize the strategy? The ProTrader tool is required to run the scans. Everything that we teach you can be done without the scans, but you will see that that the ProTrader tool is just a must-have. It's a must-have. It's not a nice-to-have. It's a must-have because it's really going to make the stock selection process a lot easier. And that's a huge part of swing trading. Getting in early, not taking hours upon hours looking for trades, so it's a must-have for sure. You're welcome, Kevin, and thank you for that. Yeah, the mastery classes will be recorded as well, and Wes is asking, how soon will they be available? Within 24 hours of delivery. So, 2 o'clock on Wednesday is when and sometimes I may be able to get them in a little earlier, Tuesday night maybe. Just depends, but Wednesday. yeah, Wednesday night. But by Thursday afternoon, 24 hours after we deliver it, they will be uploaded to the university. All right. Felix says, are you referring to the ProTrader timing DEW? Yes, the DEW is the market timing system that plays a huge part in our stock in our trading with a lot of these systems. Okay. ProTrader is a one-time fee of $395 after the course. Um, it comes included with the VectorVest premium package, whether it be US or Canada. And more pricing for that, guys, will be made more clear after the course is over. Let's just focus on getting it free for 60 days. And then after that, you can decide if you want to continue with or not. But if you just wanted the Pro Trader and stay with your end of day, VectorVest end of day or VectorVest intraday, it's $395 one-time fee. All right, Adrian says, I intend to purchase the course. Good, Adrian. Looking forward to working with you. Each mastery class, Charles, is no less than an hour. Okay, no less than an hour. Mark says, trying Wealth Simple right now, not much support. Well, that's unfortunate, Mark. I'm sorry about that, but uh, any VectorVest subscriber will agree with me. You get really good support with us. All right, I know our phone lines are busy from time to time, but we're here to answer any questions that you have, and that's why Stan and I give you our email addresses to kind of fall back on if a phone line is too busy and you just want an answer, you want to shoot us an email. All right, guys. Thank you for joining me here today, joining us. Stan, if you wanted to add something, to kind of close. If not, we will wrap things up. Jackie says, Jackie, I'm sorry, I've activated the course and ready to start. Awesome. Just wait for an email. You'll get that soon. If you haven't gotten it already, it's going to have instructions on how to access the course in the VectorVest University. And if you have any issues, just give our support department a call. All right, Mike. Yeah, I can. Yes, I can. I can hear you now. Yes, we did. Hmm. Right. Absolutely. Yep. Yep. Awesome. Absolutely. Thank you, Stan. Appreciate it. All right, guys. Have a great rest of your day. Happy Easter if that's a holiday you celebrate. And we look forward to working with you. Take care, everybody.